Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 5th of September. So we're not far away from one of the most important jobs numbers of the year, so we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, today we'll start out with the Aussie USD because we can see some movement that is going to probably give us a bit of a boost off this level here at around that 65 cent mark. We can see that we hit the lows at around that sort of 64-ish area not that long ago, and we can see what resembles a higher low sequence. We can see we've been having a bit of a push up to around that sort of 65 level. Then we pushed up higher to these interim resistance points at around 65.60. And we've got to pull back to the 20 and 50 moving averages now, which is really the lightning bolt that we're always looking for to give us the momentum shift in price action. So now that we're at this level and we've got moving averages, both of them really ribboning at the 20 and the 50 are both ribboning at around this level, around the 65 cent mark. It could give us a launching pad that we could see break through these highs here and push on to that 66.20, which has been the high of this channel that we've seen here trading for a while. So it's going to be an interesting move. Look, I would be looking for a series of higher highs and higher lows on the smaller time frame first. But if we do get it off this base, in the first instance, I'd be looking for a move up to around that sort of 65.5, a break past that, and then the 66.20 is looking pretty good. So it's probably about 110 pips potential. If we break down below these 20 and 50 moving average markers, then we're going to start looking back at around that sort of 64-ish area. The low 64s is probably going to be the target on the short. But right now, I think the momentum is long, and we're looking at a bit of a bounce off from this level here. First target would be around that 65.5. And then once that's broken through, we'd be looking for a continuation up to around that 66.20. But I think I would treat them as separate trades on this one. All right, we'll move over to the dollar index now. And we can see what is obviously a very sideways sort of market. It hasn't really changed much in the last few weeks, as you can see. We've got lows here around that 97.60 and the highs sitting at around that 98.90. Look, the moving averages, the 20 and the 50, are effectively running parallel with each other with only a very small gap between the non-existent 12 and 26 moving averages, obviously crossing over each other. You can see the histogram is nearly non-existent on the MACD. So realistically, this is waiting, and we know that generally speaking, September can be a bit of a soft-ish sort of time for the US indices. And right now we are correlating not too badly with a move on the strengthening of the dollar when we see weakness in the US markets. It's not always that way, but right now we can almost expect that could be the case. So really, with a softening in the indices, if we do get it, we might see that breakout that we've been waiting for on the dollar index. So look out for a break above the 98.90 99 area. Really, this is what we're looking for, a break above this zone, and that really opens us up to a move to around that sort of 150 point on the dollar index. This is the area that we would be targeting if we get a breakthrough from this level. I don't think I wouldn't be looking for the lower portion of it, mainly because of the seasonality kicking in. So ideally, in a perfect world, what we'll see is a series of higher highs and higher lows on a smaller time frame, a break of this 99 area with the daily, and then we can look at pushing on to a reasonable move, which of course, probably correlates for a better short on the euro is what we're looking for in terms of trading potential. But look, it is right there. It's very, very sideways. It hasn't been like this in a very, very long time. So I would think a breakout is probably imminent, and it's probably going to happen in September given the seasonality of it all. But again, we need to see a break above that. If you're going to trade it and you want to trade the euro sort of on a scalping mindset, you want to be looking in between the 97.60 here area as the bottom and the 99, basically 99 as the top. Anywhere in that zone is up for scalping. But once we see a breakout of either of those zones, then we can start looking with a little bit more momentum in either direction, back either to the 96.50, which is not the preferred, or the 150, which is what we would expect around this time of year. All right, we'll move over to the S&P 500 now, the all-important S&P 500. This has been a bit of a strange one this week. We're probably anticipating, obviously, very important non-farm payrolls this Friday, actually today. So it's going to be a very, very important one, and I think the market is anticipating its importance by really not doing a hell of a lot throughout this week. We saw a little bit of a sell-off earlier in the week. You can see here we got down to that 63.60, which is also the reversal zone, as we know. But we're know we're seeing lower highs here, or weakening highs. It's probably not so much lower. It did go a little bit higher than the previous one, but MACD is definitely dropping. So we are seeing weakness. Traditionally, the S&P 500 has a weakening effect, a couple of weeks of softness most Septembers. So we're probably anticipating a lot of that. Generally speaking, the earnings are all out of the way now. The majority of the main ones are out of the way. So really the market has to stand on its own 2 feet now. And what we're looking for here is any sign of weakness. The 20 moving average is doing a pretty good job of holding up at the moment. But I think if we're trading underneath the 20 moving average on Monday, after all the jobs numbers are done and dusted, we'd be starting to look for potentially that weakness down, maybe all the way down to 62, probably 40, which would be the target here that I would like to see it get to it at the very least, to really substantiate some sort of a pullback of any significance that gives it that 2 steps forward, 1 step back approach. But again, we're in the market's hands and we're going to trade what we see. So if we do have trading above the 20 moving average over the course of the weekend, and Monday morning we're sitting around here or maybe even a little bit higher, we'd look at scalping potentially up to the top of this ascending trend line that you can see that's actually holding in the tops. I wouldn't be looking for a big move. I think my preferred is on the way down here, mainly because of the seasonality. Generally, we are looking for a seasonality move on the S&P at this time of year. So very, very big impact of non-farm payrolls on the Friday evening. So keep an eye on that one. All right, over to gold. Gold's had a very, very big breakout. Obviously, this week we can see that we've got a really, really big move that's pushed up out of the triangle. So that was great. It happened at a really good time on the triangle. Had a little bit of weakness today. We can see that we pulled all the way down to that sort of 3,510-ish area, but it had a pretty good rebound all the way back to 3,550. There's a lot of strength in gold at the moment, and really you'd be very, very brave to try and back against it. It could pull back at any time. Of course, we know that when something's at an all-time high, but right about now we've been talking about its longs for quite some time, and realistically it's almost reached the triangle base. The effective take profit on the triangle is all but reached, because normally we're going for the length of the triangle itself. So realistically, probably around that sort of 35.80 would be the actual target, 35.90. I don't know if we've seen the end of the strength here. Trade with caution when you're going into all-time highs, of course, because you don't know when it is going to turn around, but it's not like an indice. This can certainly move a reasonable amount higher. I think 3,600 being the round number is probably the target for it. And we could set that as the target only really because it is a round number, and more than likely it will gravitate to that point. And that's the only real reason, other than it's more than likely the target also of the breakout of the symmetrical triangle. So very, very good trading on gold. Hopefully you're able to get hold of some of that, because it has been very, very strong in recent times. And even today's candle, even in non-farm payrolls uncertainty, we can still see a relatively strong pullback from what was a little bit of a sell-off. So very, very good trading on gold. And then we'll move on to Bitcoin. So Bitcoin's been a really interesting one. We obviously saw a series of lower highs and lower lows, which have played out really, really nicely. Then we've got, once we reached that sort of 107 that we were talking about the other day, it basically hit the target. It pulled back all the way to the 20 moving average. But more importantly, I think it pulled back to a role reversal zone that we're very, very comfortable with. You can see here that after the lower high, lower low sequences, it pulled back all the way to the 112, which we know is a very strong area. We have resistance over here and we have support over here and here. So very, very good role reversal zone, but just as importantly, the 20 moving average is right there as well. So that's been able to hold it at bay for now. And we did see quite a little bit of a sell-off today, nearly a $3,000 sell-off off that level, which is not unusual. This is a very standard technical analysis setup, of course. We look for these all the time, and this has been a really good one. So yes, one to certainly watch. If we see continued weakness on the smaller time frames, I'd be looking back at around that 106 sort of 107-ish area as the target for Bitcoin. That would make a lot of sense from the continued motion of the very heavy downtrend that we can see, and the pullback was to the very strong area that we would expect a reversal to be. So very, very good trading on Bitcoin. Hopefully you're able to get some of that move, because it was very straightforward in my mind. From around here to this part here around the 112, it was pretty good trading. So hopefully you're able to get some of that. If we see continued weakness, look for moves down to the 106.5 101.5 to 107. If it does turn around, I wouldn't be looking at longs until it actually breaks above the 112,000. So I hope everyone's had a great week's trading. Just be mindful that non-farm payrolls is at the end of this week. So it's one of the most important numbers that we'll be looking for this year, actually. So it could actually play havoc with markets. So trade, with caution over the next little bit. And I think Monday will show us the way for which way we're going to start to trend on a lot of the key instruments that we look at each week. Have a great weekend, everyone. And I look forward to seeing you all next week.